This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. Recently I did a 12-part series on investing in real estate, and I also did an extra one here a few days ago about vacancy rate. I want to go back into one of the videos that I did and just kind of give a simplification version of return on investment terms, because this is very hard to understand. It's something that when we get together and we sit down, that I'm going to show you how we calculate that, what those figures mean. I want you to understand what you're doing, but very simply, I want to take three terms and give you a oversimplified version of what they really mean, but it's a way of thinking about them so that we can kind of delve in a little bit further when we get together. The first one is capitalization rate. Now, this is measured like all of these in a percentage. And so let's say we have a 10% capitalization rate. I want you to think of it as like, okay, if I invested $100,000 and before debt service, I get $10,000 back, I have a 10% income on the total investment. Now, that's not necessarily going to tell you that you can pay this back in 10 years, mainly because we still have debt service. But it does kind of give you an indication of that in 10 years, essentially, you've got an income equal to what you put into that property in terms of down payment and also leverage. Now, the second definition is cash on cash. Really important definition, maybe one of the most important ones, because, when we buy investment properties and we get loans, we have real cash out. We have a 20% down payment. We have closing costs. So now let's look at this. This is where we take our net operating income that gave us our cap rate, and we take the debt service out of it, and then we say, okay, this is the cash that we have that we actually put into our bank account at the end of the year. Now, the good news about this is that if it's 20%, let's say you made a really good investment, you have a 20% cash on cash, which means you got 20% of all your money back in that first year. And if that continues for 5 years, guess what? Very simply, you've gotten all your money back in 5 years. So that is a way of thinking about that. Now, I would also think about those two terms, cap rate and cash on cash, as snapshots. Like you're taking a picture of something and you're freezing it in time because it's a 1-year analysis. And looking at it that way, our third term is internal rate of return. And I want you to think of it like what you're watching right now. A video, a time factor, a 3 or 4 minute, but in this case, maybe a 5 year. This is even more important because it's a more complex formula. There's a few assumptions that we put in there. But what happens if you hold that property and you sell it at the end of 5 years to reinvest it, and you've got a 20% annualized return on your money every year for 5 years, basically what that means is that investment is paid off at the end of 5 years. If we take the appreciation in there, we take the cash flow that you had, we take the money that you use for leverage and the money that you get back, you've gotten all your money back in 5 years. So I want you to think of the two snapshots, the two digital pictures, the one video as you're looking at these three terms so that you understand them. We'll get further into them and give them more detail, and we hope in 2014 you'll put your faith and trust in us in terms of helping you. We've helped over 1,000 people since I started investment real estate build wealth in the Oklahoma City area, and we hope you'll join us. This is Joe Pryor at the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.